Alright, gang, it's your boy Nature, aka Nature. Alright, so we're back for another video, gang. Alright, so in this video, we're going to be talking about support and resistance. Alright, basically, we already ran over this, but we're going to run over it again. Alright, so support and resistance levels, let's just talk over it. So let's just run over it again. It's the basics, but, it's important that you understand it. So, support and resistance. Support and resistance is one of the most widely used concepts in trading. Strangely enough, everyone seems to have their own idea of how they should measure support and resistance. Let's take a look at the basics first. So this is resistance at the top and support is at the bottom. Look at the diagram above. As you can see, the zigzag pattern is making a bull market, meaning it's making an uptrend market. Bull meaning it's going up. So as you can tell, as a pattern, it's a zigzag pattern. The market is making zigzag patterns in the market. It doesn't just go straight up, okay? So the market is going to make zigzags. Alright, when price moves up and then pulls back, the highest point before price pull back is now resistance. So this is resistance. The highest point before price pulls back to the bottom is resistance. So as you can see, these are all the highest points that price went to before pulling back down, and they're known as resistance. Okay, so when price moves up and then pulls back, the highest point reaches before it pulls back is now resistance. Resistance levels indicate where there will be surplus of sellers. Okay, so resistance lets you know. Remember, your resistance is when you buy, you sell at the top. So resistance is another way to let you know it's the same thing. Resistance at the top, you sell at the top. So resistance levels indicate where there will be a surplus of sellers. When the price continues up again and then hits its lowest point before reaching back up and start back up again, it's now known as support. So when price hits its lowest point before reaching back up again, that is known as support, as you can see. When price hits its highest point before going back down, it's known as resistance. When price hits its lowest point before going back down, it's known as support. So you got some resistance and support, all right? So support levels indicate where there will be surplus of buyers, because you buy at the support, you buy low at near the support. So this support levels indicate where there will be a surplus of buyers. In this way, resistance and support continually form as the price moves up and down over time. Okay, it's going to constantly make resistance and supports, continually forming resistance and supports as price moves up and down over time. The reverse is during a downtrend. It's the same way. In most basic ways, this is how support and resistance are normally traded. Also, trade the bounce. Okay, so we went over the bounce already, but the bounce is buy when price falls near the support, towards support, and sell when price rises towards the resistance. Okay, that's known as the bounce. And the break is to buy when price breaks through resistance, and to sell when price breaks through support. So the bounce and the break, I know it might sound a little confusing. We already went over this concept before, but we'll go over it again. No worries, but plotting support and resistance levels, one thing to remember is that support and resistance levels are not exactly numbers. Oftentimes you will see support or resistance levels that appear broken, but soon after find that the market was just testing it. Okay, we already know about that with candlestick charts. These tests or support resistance are usually represented by candlestick shadows. Okay, so when price does test the market, it's going to make shadows. We already ran over this in our previous lessons, gang. So this is very important. I just wanted to go over it again. Notice how the shadows of the candles right here, these are shadows, the wicks of the candles break past support but end up closing above it. This is how we know when price is going to reverse. It's going to make shadows before it reverses, or it's going to test it by making shadows, candlestick shadows, before reversing. So notice how the shadows of the candlesticks break past the support but end up closing above it. Okay, so With candlestick charts, these where we at. Oftentimes we will see support or resistance levels that appear broken, but soon after find that the market was just testing it. With candlestick charts, these tests of support and resistance are usually represented as candlestick shadows. Notice how at the shadows of candlestick, it tested the 1.470 support level. This is the support level, and tested the 1.70 support level a few times before heading back up. In hindsight, we can see that price was merely just testing that level. So how do we truly know if support or resistance were broken? There is no definite answer to these questions. Some argue that support or resistance levels is broken if price can actually close past that level. However, you find that this is not always the case. Let's take another example from above and see what happens when price actually does close past the 1.7 support level. As I was just saying, price was just doing this. Same picture, same example. See right here, you can see it's the same example, same picture. Price tests the support level of 1.470 right here, 1.470. Price tests that support level a few times, but couldn't close past it. It did go below it, but then eventually price wind up shooting. It couldn't close past 1.70, and eventually price wind up coming back up and shooting back up all the way to 1.500 for like 400 or 500, 300 pips. So price closed above the 1.700 support level, but eventually rose above it and rose back up. Okay, you know it's testing it when you see the wicks. Okay, and it lets you know. Oh, sorry about that. When you see the wicks, it lets you know that price, if it's testing it when it makes the wicks, the candlestick wicks. So we already know that. We already ran over that in Japanese candlesticks, Fibonacci. So price closed below the 1.70 right here, 1.70 support, but eventually rose above it. Okay. And wind up heading all the way back up to 1.500. Okay, so as you can see, that was the recent resistance too. As you can see, all the way to the left right here, it was 1.500 was the recent. So it went all the way back up to where it was eventually. As you can see, the price will do that. In this case, the price has closed below the 1.4700 support level, but ended up rising back above it. If you had believed that this was a real breakout and sold this pair, you would have been seriously hurt. It was just testing it. Price was just testing testing that level as support. Looking at the chart now, you can visually see and come to the conclusion that support was not actually broken. It's still very much intact and even stronger. When you see the market making wicks, and a lot of wicks on support levels or resistance levels, it's just making the market stronger for buyers and sellers to get in there. We already know about that through Fibonacci retracement. So sometimes it is a reversal and breaks the opposite way, but most of the times it's testing those 50 and 61.8 levels. So support was breached, but only temporarily. To find out, to help you filter out these false breakouts, you should think of support and resistance more as zones rather than concrete numbers. One way to help you find these zones is to plot support and resistance on a line chart rather than candlestick charts. The reason is that the line charts usually only show you the closing price, while the candlesticks add extreme highs and lows to the picture. These highs and lows can be misleading because oftentimes they are the knee-jerk reaction of the market. It's like when someone is doing something really strange, but when asking about it, he or she simply replies, "Sorry, it's just a reflex." When plotting support and resistance, you don't want to reflect on the market. You only want to plot intentional momentum or movement. So looking at the line chart right here in this example, you can also do this on the Japanese candlestick charts. You want to plot your support and resistance lines around areas where you can see price forming several peaks, which is resistance, and valleys is support. Okay, so in this example right here, they plot points where price was the peaking at the most in the market. Right here, it was peaking right here before dropping back down. It peaked up again here, peaked up again here. Same level here. It peaked up at what's that? 127, 125. Price. So if it peaks up at 125 in the past, it's going to do it in the future again. So you can see in the past it peaked up to 125 right here and went back to 125 again. Even went back to 125 again. The support, the values, the lowest point. Remember, the resistance is the highest point it went to before heading back down, and support is the lowest point it went to before heading back up. So these are the supports right here, the lowest points price went to before heading back up. Alright, so this is how you draw or plot support and resistance, areas on a line chart or a Japanese candlestick chart. So this is resistance, it's the highest point zones, and support is the lowest point zones that price went to before heading back up. So other than that, other intersecting, supports and resistance, things that you need to know is when price passes through resistance, that resistance could potentially become support. The more often price tests a level of resistance or support without breaking it, the stronger the area of resistance and support is. So first thing is that price passes through resistance. That resistance is now support. Okay, so in this example, I don't want to really go too hard, but once price passes through a resistance zone, that resistance zone is now support. Okay, so once and that support zone, once price passes through that, and that support becomes resistance. Okay, and that resistance and that support that was support before is now known as resistance. So I don't want to confuse you with that, but that's how it works. That's why it just says when price passes through resistance, that resistance could potentially become support. The other thing is more often price tests those levels of recent resistance or support levels with the wicks without breaking it. When it does that without breaking it, it's testing it with a lot of wicks. This indicates that those areas are stronger, no matter if it's resistance or support areas. When it tests those support and resistance levels that you see in the previous picture right here, it tests those support and resistance level. Price tested 1.700 level a few times, but couldn't close. In this case, price has closed below the 1.70 support level, but ended up rising back above it. So when it does test those support levels very, very strongly, when price tests those support levels and doesn't break through without breaking it, the more often price tests those resistance and support without breaking those levels, the stronger those areas and resistance support levels are when price does head back up in the overall trend. So when support or resistance levels do break, the strength of those following through moves depend on how strongly the broken of support or resistance have been held in. Okay, so it's another picture. With a little practice, you'll be able to spot potentials, forex support and resistance areas. So this is another example of resistance and support in forex. So remember, resistance is the highest point before price went to before heading back down. Okay, so these are the highest points for resistance. This is resistance. This is resistance. And support is the lowest point price was at before heading back up. So this is a strong support, resistance, support right here. Another support when price went to before heading back up. It's in an uptrend. So if you had got in right here, once price made this green candlestick, remember you would have been in profit the whole time. Price never goes below the strong support line ever again. So you'll be in profit a lot of times, but to get into the market, you want to know, how to spot resistance and support. So this is a major resistance. As you can see, that was a major move. So that's a major resistance that's tested many times. Also, resistance is where price will test, where price goes to a few times before heading back down. So it tests those lines a lot. That's when it tests those lines a lot and it goes to those lines a lot. That's strong moves that prices. Those are major resistance. So you have. I just want you guys to be able to spot resistance and support. Okay, so this is what resistances and supports look like. Remember, I hope that helped. With a little practice, you'll be able to spot potential forex support, and resistance areas easily. So in our next lesson, we'll teach you how to diagonally put on support and resistance lines known as trend lines. So in our next lesson, we'll talk about trend lines. But I hope these videos help. So when you make money in the market, you'll be able to understand what you're doing. We should have went over resistance and support sooner, but I'm glad we kind of went over it like this. All right, gang. It's your boy Nature, aka Nature. Gang.